Hi, I'm Victor. I'm an active value investor and I enjoy recording videos showing the companies that I've invested in, showing the analysis and my plan with a particular stock. Today's company is Paramount. They announced their earnings today, and I have new information to update my valuation as well as the plan that I have for Paramount, whether I should buy more shares, hold my shares, or sell my shares. Let me show you what I've got. I scorecard all my investments and I ask 4 questions that drive the decision to buy, hold, or sell. First, do I want to be in the industry? Is the company operated and performing well? Is debt under control and less than 3 times EBITDA? And I want a discount on the stock. That way I could see my investment go up in value. Based on the answers to those questions, I will buy more shares, hold, or sell my position in Paramount. Paramount provided full financials in their earnings today, and I'd like to take a look at the income statement. It was good that their earnings or overall revenue went up, but their expenses were really high, disproportionately higher than the revenue growth. That really drove down their net income. Therefore, they were less profitable in 2022 compared to 2021. Paramount broke out where the revenue is coming from, and I wanted to point out a few things. It's great that they're growing their revenues by 5%, but they're having to do so by cannibalizing their legacy business, which is still the biggest part of Paramount. And that part of the business, I believe, is going to be a drag on Paramount in the form that most of their cash flow comes from the legacy business. They don't have to put much more capital or R&D and so forth into the legacy business. The streaming business is where the future lies, which is completely understandable. And they're growing really well there, 47%. But if that's going to come at big losses over the next couple of years, this may be more risk onto Paramount. And I think they have a long ways to go. They have probably 2 to 4 years of making their streaming business, bigger scale and reach profitability. So that is a big risk item that I'm keeping my eye on. Looking at their balance sheet, their cash position did go down, which is not good. And it is good that they're paying off debt, even though their debt levels is pretty high. Looking at the statement of cash flows, the free cash flow is actually negative in 2022, which is not good. This historically has been a really good free cash flow company. And it's really showing that, hey, they have to invest considerably more into the streaming business, among other things. They weren't as profitable as they were in 2021. So all those things are coming into the statement of cash flows and showing negative free cash. So what is the value of Paramount? I like to value companies by discounting future cash flows that I expect to today's value. And what I've done is I've taken the 4-year average for Paramount for free cash flows, and that amounts to 853 million. I didn't want to take the 2022 number because that's negative, and obviously that would give us a negative value, and that isn't very useful. So instead, I'm taking the 4-year average. I'm not going to grow that free cash flow rate for the first 4 years, but I am going to grow it, long-term growth and the perpetual growth rate of 3%. I'm going to use a higher weighted average cost of capital because, this balance sheet that Paramount has is riskier. It's above the 3x factor. Therefore, it's going to be a higher risk valuation. Based on that criteria, I think the value of Paramount is $10.4 billion, but the market cap of the company is $14.9 billion. So buying shares in Paramount right now are at a 28% premium. So the performance of Paramount, year-over-year growth of 5% is good, but they have negative free cash flow and they're paying a dividend of 3.9%. So they don't want to upset, shareholders by taking away the dividend, but you can't sustain a dividend if you're going to be negative free cash flow. You have to, one thing's got to give. Either you got to start generating free cash or you got to take away the dividend. They have too much debt on their balance sheet. And they have to continue to pay down that debt. Again, why are you paying that dividend, that high dividend, when you need to get some of that debt off your balance sheet? For 2023, sales are going to be flat. It's great that they're growing their streaming business, but they're cannibalizing their legacy business, which is bigger. So that's going to be a 2 to 4 year process for them to become a more modern, streaming company. So it'll be a while before they get to a good ratio there. My outlook is there's more higher risk with Paramount than, let's say, a Netflix. You know what you're getting out of Netflix. And they don't have high growth. 5%, year over year growth is not, something to celebrate too much. It's good that they are keeping their sales flat, but it's not very high growth. They pay a good dividend, but I would argue that they shouldn't. They should take away the dividend, make the balance sheet better, make sure that they're supporting that streaming business really well. There's a lot of open questions for Paramount at this time. All right, so let's scorecard Paramount. It is an industry that I'm interested in. I think it's Paramount, if you buy it at the right time, it's just a really, really good business. The company, I gave them a check mark, even though I was thinking maybe I shouldn't because of the balance sheet and paying that dividend when they should be conserving that cash. But overall, I think they put out really good movies. I think their move to streaming is going well. So I gave them the check mark. Their balance sheet is in poor health. They got to get to 3x, and that should be a priority. And you're buying the stock at a premium. So therefore, I'm a seller of Paramount. I will be selling my complete position of Paramount. Thank you for watching the video. I hope you found it interesting. I really enjoy recording videos, and I'd appreciate if you would give me any feedback on the comments on how to improve the videos, or maybe some topics that you'd like me to cover. Thanks again for watching, and good luck investing in 2023.